Have you ever wondered why some cryptocurrencies skyrocket to the moon on empty promises, while projects that are literally building a new global financial system stagnate for years? Why do dog-themed coins gather billions in market capitalization, while technologies already used by Google, IBM, Boeing, and the Reserve Bank of Australia remain under constant pressure? Today, we are going to talk about the largest, quietest, and perhaps most important confrontation in the entire crypto industry. This is not just another drama. This is a battle for the future of institutional money. The topic of our breakdown is HBAR versus the SEC, the Clarity, or as it's known in the corridors of Washington, the Clarity Act. We are in March 2026. The market has survived a crazy roller coaster. We saw HBAR soar to 40 cents in early 2025 on a wave of euphoria, only to pull back to the 10-cent mark, forcing weak hands to capitulate. But while retail investors panicked and asked, "When Lambo?" tectonic shifts were happening behind the scenes. The U.S. Securities and Exchange Commission, SEC, has held the entire industry hostage for years, refusing to provide clear rules of the game. But right now, before our very eyes, the ring around the SEC is tightening. On the table lies the Clarity Act bill that will decide once and for all who calls the shots. On the table are applications for spot HBAR ETFs from giants like Canary Capital and Grayscale. Today we will break down how Hedera outsmarted the regulators, why institutions are hungry for access to HBAR, and why Clarity will be the very trigger that will forever change the price of this asset. To understand the essence of the conflict between Hedera and the SEC, we need to go back to the basics. Let's be honest. Hedera Hashgraph is an outlier in the crypto world. It's not even a blockchain in the classic sense. It is a directed acyclic graph DAG, technology that operates faster, cheaper, and greener than most competitors. But Hedera's main differentiator isn't in its code, it is in its governance. While other projects preached about absolute decentralization, anonymity, and anarchy, Hedera's founders, Lehman Baird and Mance Harmon, took a different path. They created a governing council. And who joined it? Not a bunch of anonymous developers in hoodies. The council includes Fortune 500 giants, Google Cloud, IBM, Boeing, Dell, LG, alongside some of the world's largest banks and financial institutions. And here lies the paradox. How can the SEC call a project an unregistered security and accuse a network managed by trillion-dollar corporations of fraud? Will the SEC sue Google or Boeing for supporting nodes and managing the network? It's absurd. From day one, Hedera played by the rules. They didn't hold a classic ICO, which the SEC loves to equate to an illegal stock issuance. Instead, they utilized a SAFT, Simple Agreement for Future Tokens, an agreement available strictly to accredited investors. Hedera literally hired the best lawyers in Washington to ensure their every step complied with U.S. laws. But for the SEC, none of this mattered. For a long time, the SEC under Gary Gensler relied on a tactic of regulation by enforcement. Their stance was simple: everything except Bitcoin is a security. We won't tell you how to become legal, but if you step out of line, we will sue you. Because of this fear, HBAR traded at a massive discount for years. Institutional investors said, "Hedera's technology is amazing. We want to build on it, but we cannot invest in the HBAR token itself until the SEC gives the green light." And that light is finally starting to turn on. In late 2025, Wall Street broke through. After Bitcoin and Ethereum ETFs paved the way, financial behemoths started looking for the next big target. Investment firms Canary Capital and Grayscale challenged the regulator by filing applications to launch spot ETFs for HBAR. The application from Canary Capital is a masterpiece of institutional preparation. The fund is physically backed by tokens, asset custody is entrusted to BitGo and Coinbase custody, and pricing is pegged to the CoinDesk index. Everything is done strictly by the Wall Street playbook. How did the SEC react? as always, with bureaucracy and delays. By rule, they can postpone a decision for up to 240 days, and they milk that timeline to the maximum. But while the SEC was stalling, institutions had already begun to move. When the first HBR-based trusts hit the market in the fall of 2025, the Canary Fund attracted tens of millions of dollars in its very first week. Smart money is already scooping up the asset. Whales understand. ETF approval is a bridge over which trillions of dollars from traditional finance can legally flow into the Hedera ecosystem. But for this bridge to fully open, a final blow is needed. And that blow is the Clarity Act. March 2026. The Clarity Act is gaining massive momentum in the U.S. Congress. This bill is designed to establish definitive rules for digital assets and divide jurisdictions between the SEC and the CFTC. Uncertainty is the ultimate barrier to institutional adoption. U.S. banks watch as Europe adopts the clear MiCA framework and Asia builds crypto hubs, while they remain afraid to make a move. For Hedera, the passage of the Clarity Act is the holy grail. As soon as HBAR officially receives the status of a commodity or a utility token with a clear regulatory framework, the threat of an SEC lawsuit will vanish into thin air. Why are banks so intensely interested in HBAR in the first place? The answer lies in the ISO 20022 standard. This is the new international technical language spoken by central banks and systems like SWIFT. There's a limited pool of cryptocurrencies purposefully built to integrate with this standard: XRP, XLM, Algo, and HBAR. These are not speculative wrappers. They are assets directly hardwired into the global financial infrastructure. Right now, central bank digital currency, CBDC pilot projects are being tested on these networks. Hedera is already working with the DTCCK Corporation that processes quadrillions of dollars in transactions. This is exactly why the intersection of blockchain and traditional finance requires legal clarity. Once the law takes effect, HBAR will be at the epicenter of the new financial system. But given all these facts, why is the price of HBAR currently floating around 10 cents? Let's look at the history. The token hit its all-time high in 2021 at 0.57. In January 2025, it made a stunning comeback to 40 cents on the back of ETF news. However, the crypto market is unforgiving, and by March 2026, the token had pulled back. For newcomers, this looks like weakness, but professionals see that the network's fundamentals are growing exponentially. The network processes billions of real transactions, and massive tokenization of real-world assets, RWA, is actively taking place. Technological value is at an all-time high, while the token price sits in a zone of deep undervaluation. The market is still driven by speculators, while institutional capital stands on the sidelines waiting for the passage of the Clarity Act. By the second half of 2026, the SEC finds itself backed into a corner. They are being pressured by politicians demanding an end to the stifling of innovation, and by Wall Street giants looking to profit from ETFs. Sooner or later, the dam will break. Imagine this perfect storm. Congress passes the Clarity Act, and the SEC approves the spot ETFs from Canary Capital and Grayscale. Asset managers and pension funds gain a tool to buy HBAR in a single click through their brokerage accounts. And when Wall Street liquidity floods the market, a total supply of 50 billion coins will seem like a drop in the ocean. In the short term, HBAR will likely continue consolidating in the 10 to 18 cents range. But the bullish scenario for the second half of 2026 hinges on the Clarity Law and the ETF decision. If both events materialize, a breakout to the 0.3, 0.45 levels by December looks entirely justified. And looking further, to 2027-2030, when tokenization becomes the global standard, a return to the all-time high of 0.57 and a push toward 1 or even 2 will no longer seem impossible. Capital will inevitably transition from speculative empty shells into projects with genuine real-world utility. HBAR versus the SEC is a battle of the old world against the new. And right now, in 2026, we stand on the threshold of the greatest transformation. Hedera has spent years building its foundation, patiently waiting for the rules of the game to become transparent. Clarity is near. Those who understand this today could find themselves in a highly advantageous position tomorrow. But remember, the crypto market always carries risk. Do your own research and keep a cool head.